Alright, so you've got that dream car picked out. Great! But now you have to figure out how you're going to pay for it, which is not as great. Finding the right auto financing isn't nearly as fun as finding the right car, but it's just as important. Just like you review the features and prices of different cars to figure out which one fits you best, you should do the same while looking for auto financing. We're going to give you a few tips that will help you to secure the best financing and save you money in the short and long term. Now, before you do anything else, it's important to figure out how much you are willing and able to spend on a new car, including how much to pay up front, which is called the down payment, and how much you can afford to spend each month on car payments. Now keep in mind that a larger down payment will end up saving you money, because your loan amount will then be smaller, and a smaller loan means lower monthly payments and less interest as well. As far as your monthly payments are concerned, financial experts advise not spending more than 20% of your income each month on car payments. You also need to factor in your other financial responsibilities as well, like rent or a mortgage. If you end up being unable to pay for the car, your car will be repossessed, and you'll destroy your credit score. Okay, so you've got your car picked out and figured out how much money you'd like to put down on it. The next thing you should consider as a car buyer is the rate of interest you'll be paying on your loan, which is also known as APR, or annual percentage rate. Remember, when it comes to loan interest rates, the lower the better. A lower interest rate gets you lower monthly payments and saves you money overall. The interest rate you will get on your loan depends largely on your credit score, which is based on your past history with paying off debt, like credit cards and other loans. The higher your credit score is, the lower the interest rate will be on your loan, and you will also be more likely to qualify for any special rates that the dealer is offering, both of which save you money. Now, if you have a low credit score, that means you will have to pay a higher interest rate on that loan. But don't panic. It's still better to know that before you shop for your loan, so you know what to expect. And then you can figure out which cars are affordable for you, even with a higher interest rate. If you don't know your credit score, check out the auto financing page in the how-to section at newcars.com. It lists several websites that can provide your credit score for you free of charge. Next, it's time to focus on the loan itself. Just like you shop around to find the new car that fits you, you should do the same for your auto loan. We highly recommend talking to your bank or credit union and getting pre-approved for an auto loan, so when you're negotiating at the dealership, you'll have leverage. If you aren't pre-approved and don't know what kind of interest rate to expect, then the dealer holds all the cards. They can offer you a higher interest rate, and you won't know if it's a good deal or not. But if you walk in with a pre-approved loan, you'll be ready to compare the different rates being offered and find the best deal to save you money, whether it's from the dealer or another lender. Another factor to consider on your auto loan is term length. Now, term length is simply the number of months it will take to pay off the loan. Loans with a shorter term length will require larger monthly payments, but since you finish paying off the loan sooner, you pay less interest and make fewer payments, which saves you money. Most loans feature terms between 36 and 60 months. But if you can afford the higher monthly payments, remember that shorter is better. And now, here's our biggest tip for getting the best loan on your new car. If the dealer asks you what monthly payment you want, don't answer. This question is designed to confuse you into taking a loan with a higher interest rate and longer term. Instead, tell him your down payment amount and ask him what rates and terms he has to offer you. Then compare those to what you've already been pre-approved for and simply choose the best one. One last thing. If you don't plan on keeping the car long term, or you prefer to make smaller monthly payments, then leasing might be an option to consider. Leasing is basically renting the car, and at the end of the lease, you'll have to give the car back. For more information on the pros and cons of leasing, check out our loan versus lease page in the how-to section at newcars.com. So to summarize, remember to first figure out how much you are willing and able to spend on a new car, including how much money you'd like to put into the down payment. Find out your credit score to get an idea of what interest rates you qualify for, and search for loans from different places, like your bank or credit union. So when you get to the dealership, you'll be ready to negotiate. And finally, decide on a term length that fits your finances. If you keep these things in mind, financing your new car doesn't have to be scary. You can even save money if you play your cards right. For more information on auto financing, or to get more new car buying advice, check out our extensive how-to section at newcars.com.